Welcome to the 2-minute warning interview series, where we take a rapid, if insightful, dive into the energy transition and what's happening worldwide. Delighted to introduce Dr. 𝖤𝖷𝖢𝖫𝖴𝖲, Principal of G2 Energy Insights and a Senior Fellow at the US Association for Energy Economics, also known as the USA EE. 𝖤𝖷𝖢, welcome.
Thank you, Michelle. Nice to be here.
Thank you. Let's kick off with some broad strokes. The world spent around $500 billion, a record high in 2020, on renewable power, electric vehicles, and other technologies that are trying to reduce the global energy system's dependence on fossil fuels as part of this mass decarbonization push up to 2050 and beyond, of course. This marks a 9% increase on 2019, despite the huge disruption we've seen with the pandemic. These are Bloomberg BNEF's figures. So while momentum is clearly strong and is going in the right way, especially when we compare it to previous years, do you see that some areas in the energy ecosystem are at risk of being left behind? Are there some markets, for example, like hydrogen, which are essentially capturing all the hype and all the interest, while others in renewables or energy efficiency might need a little bit more attention? Are there any red flags from your point of view?
Yeah, there are several red flags. Before I get to several specific areas where we need more investment, let me make a overarching observation in terms of these investment numbers. Please. So I think most of the time we miss the scale of the problem that we have, or scale of the challenge. Let's not call it a problem. And, the world has 8 billion people roughly today, and a lot of these energy transition discussions, although they seem to have the global perspective when people talk about it, if you look at those numbers, $500 billion investment, for example, where did that investment take place? And I didn't look at the Bloomberg numbers, but the IEA, International Energy Agency, they publish every year world energy investment, right? And the numbers they published last year, so the 2020 numbers were estimates. They're about the same, 500 to 600 billion dollar range for renewables, but then there is the total investment is 1.5 trillion. So the rest is still in the realm of fossil fuels, oil, gas, and coal. Some of it for upstream and midstream, and some of it is for power generation and then electric power systems, right? So yes, renewables numbers are increasing, but the rest of the energy industry is also attracting a lot of money, despite the disruption of COVID.
And despite greater talks about peak oil as well.
Correct. So I guess I'll come back to the scale point, but let's say why I think the red flag, orange flag, we can debate the color. The oil and gas resources are depletable resources from a field level perspective. From a global resource perspective, this is another thing that since my dissertation 30 years ago, I had a beef with. There's a lot of oil and gas resources. The world is not running out of oil and gas anytime soon, physically speaking. It's just a question of whether we want to spend the money to develop some of these resources in some of the more challenging areas. And some of the challenges are geological, some of it are actually geopolitical challenges, right?
And increasingly environmental, as
correct.
we see.
Of course, right? So, nobody develops all the resources they can develop. It's a cyclical industry. So the fields that you develop, they will eventually deplete. And if you're talking about the unconventional resources, they have a much quicker turnaround because of the nature of the unconventional wells, smaller wells, they deplete fast, and all of that you need to continue to drill. So it's more like a manufacturing from that perspective, although a lot of my colleagues hate that term. It's not real manufacturing, but anyway. So yes, peak oil demand, we can debate that, but regardless of whether there's going to be a peak oil demand, 2025, 2030, 2040, whatever it is, there's still 100 million barrels a day of demand we're talking about here. And we're going to have to prove up new reserves and supply that demand, even if it peaks, as some people imagine, right? So that's one area that we're going to have to, look forward to some significant investment. especially after everybody cut back their capital budgets last year significantly. I mean, 30, 40, 50% of what they were planning, even more in some cases, right?
And the world essentially starts to wake up from the pandemic. Well,
Exactly.
parts of the world, and air travel, for example, starts to increase, train
Exactly.
travel, so on.
And that waking up is actually an interesting question as well. If you look at the debates in Europe, EU, and the US, what color the stimulus going to be? Is it going to be a green stimulus, or is it going to be something else? But the reality is, for example, in the US, American Society of Civil Engineers have been reporting the quality of the US infrastructure, not energy infrastructure, overall infrastructure, roads, bridges, sewage systems, water systems, you name it, right? It's D+. I mean, when I used to teach, D+ is basically a grade that I gave somebody if I didn't want to fail them. I felt for them. So it's failing. So
that's a grade.
Right? So
there's
we
no sympathy in this energy transition.
Right? So we need to build a lot of real infrastructure that sustains a modern economy. So, and a lot of those things are going to require fossil fuels. I mean, you know, building materials and cement production, steel production, and road building, bridge building. So a lot of these things, very energy dense activities, you're still going to need a lot of fossil fuels, right?
Are you seeing some of the hype about these other energy markets, such as hydrogen, which we touched on in the beginning? Are you seeing that there might be a risk that these markets are taking much needed funds from the more traditional markets, which are very clearly are needed for energy security as well, just as much as the greener market? Are they stealing funds essentially from investors who want to show off their green credentials?
That's an excellent question. I sometimes feel like that because as a traditional economist, you know, I don't want to confuse the listeners here, but, you know, unless you're a subscriber to the modern monetary theory, I don't know if you're familiar with that term. Basically, this is a school of thought in economics that talks about, you know, if you're the publisher of the money, like US Federal Reserve printing dollars, or EU Central Bank printing euros. So you shouldn't be too concerned about inflation. You can increase the money supply and do these kind of stimulus. And there's, of course, a lot of debate about this. Unless you're a full subscriber of that view, I come from the school that there are constraints, and the capital markets are constrained as well. And traditional allocation of capital to the highest return, means that there may not be capital left for other projects. And if policy, right, if policy and incentives, subsidies of any type pushes people to invest in hydrogen, wind, solar, battery storage, that should mean to a certain extent less funds available to invest in traditional energy sources, if you like, or energy infrastructure. I mean, you can see that
investing in a market like hydrogen at the moment, and as you say, on a rational basis, perhaps that would take some funds away from the more traditional markets, especially as we're in this pandemic recovery mode. Well, I think we hope to be this year in a pandemic recovery mode. Exactly. And do you think that's a valid allocation of those funds for a market like hydrogen? What is your opinion about the scale up of a market like green hydrogen? Because of course that's generated a huge amount of interest, especially in the last year. Correct.
I mean, hydrogen is, in a nutshell, is expensive, and green hydrogen is the most expensive. So that, you know, if you talk about electrolysis, and there are some other technologies people talk about, but of course you can do blue hydrogen if you use methane and separate the carbon and hydrogen and then use carbon capture and sequestration. And CCS, of course, where I used to work at the Bureau of Economic Geology, they had a Gulf Coast Carbon Center. They do a lot of research on that topic. It's doable from a geologic perspective.
Again, the scale isn't there.
Exactly. The cost and scale in any of these things is the challenge, right? 7 billion euro project that they're talking about north of Germany, offshore. If you're doing a purpose-built project for green hydrogen, you're spending capital dollars that you don't need to spend from the perspective of meeting demand, right? Meeting energy needs of a population. So you're talking about spending that money for the purposes of decarbonization, right? So if you look at it from that perspective of capital allocation, there's certainly going to be an impact on the rest of the economy, not necessarily just the energy sector, but if EU is going to allocate billions of euros to these kind of projects,
as part of the hydrogen strategy that it's set out up to 2030.
Correct. And I think, this point was made. I was looking at a report, I want to say University of Florence School of Regulation, or a European institution. They did publish a report on the EU energy strategy. I think they were making some of these points. I don't want to really quote too much, but because I quickly glanced at it, they talk about hydrogen being an expensive thing and not necessarily cost competitive, even for decarbonization purposes. Maybe, this is consistent with a lot of other studies, last 20% of energy system to decarbonize.
And it's also at this contrasts to a view very much so that these different Asia, Middle East, US and Europe, we've recently been doing a lot of research and roundtables with leading informed speakers from each of those areas, all saying our region can be a leader in the global hydrogen economy by 2030, 9 years away. Yeah. It's very, very short if we look at the timetable that it took for a market like solar or wind to ramp up. And of course, there was an issue of economics there and it becoming more affordable and more competitive. And now its competitiveness has soared perhaps beyond what many people could have anticipated by 2021. But the schedule for that with hydrogen and the level of R&D and technology deployment as well with hydrogen has not yet reached that scale for there to be confidence that there's going to be global hydrogen economies in each of these regions by 2030. Correct. So what is the biggest risk from that, in your view, that it will steal much needed energy, financial supplies from traditional energy markets, which are more impactful in giving energy security?
So, I would like to think that there's going to be enough rational people in the financial world that they're going to be able to balance rate of returns with or without, policy support and subsidies, right? And where hydrogen makes sense or may make sense, and for example, U.S. Gulf Coast. It's a very, synergistic, large petrochemical refining downstream infrastructure with a lot of pipe storage and everything else. So, and there's already a lot of hydrogen production here as a byproduct of all these activities, right? So, but that's not green hydrogen, right? So for decarbonization purposes, people don't seem to like that. But from an economic viability perspective, if there is going to be a hydrogen, that is the low hanging fruit that people may pursue, right? So, those are the kind of things that may be advantageous for hydrogen. But green hydrogen is going to require a lot of, in my view, government money, either direct funding or subsidies. Otherwise, it's going to be a, difficult challenge.
This is a very difficult question to answer, but as a quick yes, no, or maybe, so those are the three options, yes, no, or maybe, do you think it's viable that any of the regions I mentioned can be well-established, competitive hydrogen economies on the scale, well beyond the scale of solar, really deeply established hydrogen economies by 2030?
In my view, no.
Maybe. No.
We can get into the what does it mean well-established and what size we're talking about. But in my mind, the scale of energy challenge is so huge that in that context, my answer is no.
And of course, you just mentioned about the scale of the challenge of energy, and that's not even beginning to touch on the UN's figure that nearly 1 billion people worldwide still lack access to electricity. So we're talking about all these new markets and scaling them up, but arguably a lot of tools are already there to try and support those nearly 1 billion people who already still need the help. What's your view on that?
Yeah, I'm glad you mentioned that 1 billion number and the UN, because that is really, upsetting to me. I did a webinar at the 𝖤𝖵𝗹𝖵𝖤 last year. That 1 billion number is based on Sustainable Development Goal number 7, I think, is related to the energy. And if you read that, they talk about renewable energy and energy efficiency. And I'm sorry, but that number is woefully inadequate to represent the energy reality of the world, right? And I've seen studies which I, agree with. 3.5 billion people. They published this article recently. There's an organization called Energy for Growth Hub in the US. 3.5 billion makes a lot more sense to me, because that means access to modern and sufficient energy, right? Because Sustainable Development Goal will consider you electrified if the transmission grid is attached to your village. That doesn't mean that every person in that village is getting the same amount of electricity you and I get, right? And so, or if you have a solar panel in a village in remote parts of Africa, you're electrified. But these are not.
And that's assuming the solar panel continues to be maintained and works.
Correct. Of course, right? So if you compare that with what has been happening in China over the last 20 years, or what has been happening in India more recently, those kind of efforts are great. It's great for people to have some electricity rather than none, but those are not sufficient to provide modern life. That will prevent a lot of unnecessary illnesses and deaths in these countries where they do not have modern infrastructure for sewage systems, clean water systems, clean cooking fuels, and you name it, right? And everything
up to that modern level of life. You just mentioned the modern standard of living that we're used to. What sort of figure would you think economically would be needed to get to that point?
I mean, it's a back of the envelope calculation, but I also presented this in my webinar last year. $5 trillion, $6 trillion is what I calculated, just basically primarily from a power generation perspective, but also including some transmission lines, transmission and distribution networks, and also some fuel distribution networks for oil and gas. But most of it is power generation. So $5 to $6 trillion.
And that's based on our current population.
For current population of 7.5 to 8 billion people, to bring everyone who is below 2018 average consumption level to that level. And that is
not 10 billion by mid-century.
No, not 10 billion. So the growth number is something different, right? So, and that average 2018 average.
No, but my point is that is already a significant sum in the context.
Of course.
But that's where the population will continue to grow, whether the finances and the energy technology developments are there or not.
Correct. Now you need to meet the energy needs of that growing population. So that the number is a leapfrogging number, and to bring us to an average of 3,700 kilowatt hours per person per year. This is not household consumption. This is economy-wide consumption. But if you look at the same numbers in the UK, I believe, it's about 6,000 kilowatt hours per year. In China is 4,500 kilowatt hours per year. This happened in the last 20 years. So if you look at these numbers, we're not talking about huge numbers, but even to get to that world average, you're talking about $5-6 trillion now, immediately. So
comparatively, the energy transition, some forecasters are saying, is going to cost up to 40 trillion by 2050, and people are already balking at that number, and that's by 2050, not an immediate 6 trillion as well. As you say, it's looping back to your initial comments about understanding the scale of the challenge.
And this is why, China and India are still building coal plants, nuclear plants, hydro plants, wind, solar, gas-fired power plants, LNG import terminals, pipeline networks. They have to do everything to have secure, reliable, affordable energy to meet that need.
And that mixed energy basket certainly isn't going away anytime soon. Jan, thank you very much for joining us. We very much
my pleasure.
Insights, and looking forward to inviting you back very soon. Hopefully you'll be able to join us.
Look forward to that. Thank you, Michelle.